All right, it's Friday, March 8th. This is a weekly SPY recap, recapping what developed for this week and seeing what might be unfolding going forward. These are the 5 days of the week this week, which I'll get into in a minute. Monday, Tuesday, Wednesday, Thursday, Friday. And what I do on these weekly recaps, as always, is I kind of go through, this is the weekly chart, this is the monthly chart, and I kind of show how I use the strat in order to see what's unfolding, to develop some expectations when things are developing relative to their respective time frames. And then once that's in place, I can go to my 15-minute chart each day, which that's what this is here. This is Monday, Tuesday, Wednesday, Thursday, Friday, and I kind of see how intraday structure unfolds relative to some of those expectations. So if we start with the weekly chart, since this is a weekly update, and that's really my main focus most of the time, even though I'll look at what key monthly levels are and key daily levels. But on the weekly chart, we have a kind of a 2-up week that closed neutral here with a little bit of red. It's almost a doji bar. And the week before, we had a green week that kind of went up, but didn't really have that much momentum to the upside. So we're getting to a point here where the momentum to the upside seems to be unraveling a little bit. If you look at this bar, let's say this becomes a doji bar and we get a 2-down week next week and we get a bunch of red bar. We haven't had red weekly bars in a long time, and I've discussed that. We've only had one that's had a 2 down, and that immediately came up. Even this one was more neutral. So if we end up, let's say, getting a deeper, 10% pullback in the market, some bigger, deeper pullback, you're going to look back on this chart and say, oh, this was the red doji bar and that was the high, and then it comes down for a few weeks in a row. So keep that in mind. Again, I don't predict anything. I just know kind of what things look like, and where if it does break that low, then it's expected to go to that low. And if you see a green bar high here, I expect that high to be taken out. Those are the expectation items I look at each week. But I'm just trying to point out, should we get a correction and you'll see this doji bar, you'll look back and say, oh, that was easy. I should have known this was the top. And, the market goes down for weeks at end. So, that's something that certainly I'm monitoring. But in terms of what to expect for next week, while I expected this week green to go up a little bit and I expected the high of this week to be tested, I don't know what's going to happen on, going forward into this week. I do know it is a doji bar at the end of a very long run, and therefore, and I'll get into in a minute why this daily bar closed red to end the week, so that should follow through lower. This bar, I do know what to expect on a daily time frame, a little lower. How that then leads into what the weekly, that could be the very beginning of the weekly chart getting the 2 down. If I can get a 2 down on this week, then all of a sudden I'm starting to target a lot of these levels. I know we have liquidity levels down here, little pivots. We have a gap down here. So, this daily chart could be the very, very beginning of this weekly chart going 2 down, but we don't know that yet on the weekly chart. It's far, we could also stay very neutral inside of here and just chop too. So, we're going to have to see. But going into, so let me kind of start there real quickly. Like the interesting thing was this week, 2 weeks ago, we had a green bar. So I was expecting the high to be tested. The way that unfolded 2 weeks ago, was right here. This was the green bar. The first 2 days of the week started lower, below the high of that. So therefore Monday, Tuesday went down, and then eventually we got to the highs. This week was a different story where we ended up green, and I expected the high to be tested again, but that test happened the very first day of the week and then failed. So as I'll get into in a minute on the recap, that really had my expectations to a potential failure to the downside. Whereas this week, I expected that high to be tested from the week before, and we opened up a little below that high. So I was always waiting for the move back up. Whereas once we failed on the first day of the week, I knew we had all week to really get lower. And, the market did its job of taking out the high of this week. So I thought, it could be the beginning of a failure, just given the fact we're at exhaustion risk, But as it turns out, we had, just one good day of follow through, and then eventually it kind of moved up. And there are a lot of videos here that's showing, the 15-minute structure, which I'll get into in a minute, how that unfolded each day. I think Wednesday was the trickiest day, and then yesterday was actually a pretty easy up day to, kind of get with, even though, you thought maybe the downtrend would still unfold. But, I just wanted to point out how on the weekly chart, again, when things happen matter. So you expect 2 green bars here. I expected that to go up. But in this case, we opened below the weekly high, and therefore, I expected price to move up later in the week. This one here, we opened above the weekly high in the first day, and therefore we failed with this big shooter bar here. So there was a potential for a failure. But then once price couldn't reach its target, that's how another expectations come into play. You're expecting that failure to continue, and then you get a 2 up. Well, that changes your expectations a little bit, and maybe, this failure wasn't going to develop. And obviously it didn't, but we end up with a neutral bar. So I'm just explaining some of the thinking, that goes into this, because I'm not predicting it at all. It's expectations relative to what's developing on each time frame, and then watching, the unfolding intraday structure. And finally, I guess the point I want to make was the monthly chart. I'm always looking now, when things haven't matter again. This is the beginning of the month here. Now we're already a couple of weeks in, I guess, and I know the open of this month, which is this green line. So as long as we stay above that, the monthly chart is also a little bit of exhaustion risk, up, 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 up. So, it's possible we did take out the high of last month, the green, up here. And if this turns red all of a sudden, that really becomes interesting to see whether we get a failure. Now, to get a failure on the monthly chart, given we already took out the high, we'd have to get through the midpoint of that bar. But if it is red temporarily, we can come down quite a ways to get to that point. So, my bias is also to some extent, where the open is of a given month relative to all this weekly, price action I'm talking about, whether I expect a high to be tested or not. And then the daily bar, flows into that as well. So I'll leave it at that in terms of the bigger picture. So in terms of then this week, like I said, if we really review it, and I have videos each day about it, this was a failure day to the upside. So I expected that high to be taken out. And on the first day of the week here, it was, I believe, out of the gates, we took out the first bar high and went high. We grinded up, made that big push up. So there, it looked like maybe we're just going to get more continuation on the daily chart, up, up, up. And then we had a big failure at the end of the day. And I discussed how that was a negative sign to me. I think I bought puts here going into the next day. And anyway, this day here, you expected, see, that's the difference too. When, and I'll show you today why I didn't buy the open on the upside, because we're already at exhaustion risk. Whereas here, once the, we had the 2 down day, and I have a target down to this low on the, using the broadening principles of the strat, and then the market opens up on the first bar and continues lower, I'm expecting that to, go to its target. So that's why it's a very, good aggressive trade early. 1 push down, 2 pushes down. So obviously we closed red. And again, I've discussed this a lot during the week. I expected things to go lower, but I thought there might be consolidation first, given that, you got that buying tail in here. And as it ended up, price on these 2 days, they both gapped up big. There was some economic numbers. So we never really were staying below the midpoint of the prior day and continuing as I expected towards our weekly targets. And on this day here, I actually tried to put trade, because the first trade, even though it was at the upper end of the range, which I would have preferred it being in the middle of the range, I bought some puts. I showed you how, because it came to the halfway point, I scaled out, and then I took a very small gain. And eventually, once it didn't make its 2 pushes up, I bought puts again here, I think, still anticipating that low of the week to be taken out. And it was a little bit of a gain towards the end of the day. Obviously, I saw that 2 up failure bar. I was expecting it to go lower. I shot all kinds of videos yesterday how instead the market on big news gapped way up above the highs, and therefore, once the first bar broke to the upside, you had 1 push up, pause, essentially 2 pushes up on the day, and reach that broadening target. And that's why today, knowing that these 3 days kind of broadened out, towards its target to the upside, I wasn't that excited to get long. But if you look at today's price action, there was again another economic news jobs report or something. The pre-market range was between the blue lines, and it was volatile. So the first bar did break above. So there's technically a buy in terms of intraday structure. But I didn't want to buy that, given that there's no real actionable signal here. I mean, you're just kind of getting momentum to the upside, and I wanted to see more what would happen. I wanted to see what individual stocks were doing. Not every stock was breaking up to new highs. A few were, but not many. So I wasn't that excited to play the indexes today, knowing we're at exhaustion risk and everything else, versus a day like this where we have a 2 down day that has a target down here. The open, is exciting to play if price action leads you there. Today, it was more exhaustion risk, so I didn't do anything. And then, if you're going to trade this, you did have a whole power with which you were ahead. And, you just have to be cognizant of the fact that maybe, I was not surprised at all to see this kind of a big move down. I just wasn't. And actually, once it came down here with this big red bar to the midpoint of the first bar, at that point, you're exiting any long trade you had. I think you could do no worse than break even. The way I trade, I scale out on that first move. So I would have probably had a small gain in here. This is the stop. And then once it kind of broke down, big red here, you were expecting that, that. And then the way I view 15-minute structure on the failure here, if it's going to come down, I'm always looking at that first bar. After seeing this big red bar, I would anticipate that low being taken out. And once that got taken out and just paused, I was looking at the pre-market lows to be taken out down here. And that's eventually what happened. It made 2 pushes down. Now, the interesting thing was it only made 2 pushes down to the midpoint, into this midpoint of this buying tail. So that's why that's a pretty good support kind of look. So even though you had kind of an outside attempt where you thought maybe you take out the high of the day, get through the midpoint, and then get to the low, when you see this big buying tail, that's really, I always use the midpoint of these as kind of support in my mind. And that's why you had 2 pushes, down and then a little rally. And then I finally discussed how I bought, knowing that this bar, or likely was going to close red and follow through into next week and can start a whole big chain reaction to a 2 down, move here that could have a much deeper pullback into some gaps down here. I decided to buy some puts at this red line. I shot 2 videos. You can go watch them. And then, and then I scaled out very end of the day just to be a little conservative. I really could have been aggressive and held it, in my opinion. I think this move is going to come down at least, below this tomorrow or in the next week. And then we'll see if we get the higher highs and eventually the lower lows. And again, this is all in anticipation of a potential 2 down week. And I'm going to have to see day by day if that unfolds. And if it doesn't, if let's say this 2 down day can't even reach its first target down here, here's one, and for some reason immediately round, then I might have to change my whole point of view. But to me, this is a reversal bar. I've been expecting some kind of pullback to unfold. I'm just, I was looking forward even on this week here. It's when that first day of the week broke the high and failed, up here, I was kind of excited that it might develop. Now seeing the end of the week with this red bar, knowing it should follow through lower, I'm excited that this weekly chart might have a 2 down week, but I'm going to have to watch and see if that happens. So that's a recap. That's some of my thinking. That's the way, I've put everything together with multiple time frame analysis, the strat, and then I go, day by day using my methodology of the 15-minute chart, which I have a lot of videos on how I like to look at the first bar pre-market range and the flow of price action, with 2 pushes up on the day on directional moves and certain failures and everything else. So that's it. I guess a lengthy recap here, but I'm definitely biased to the downside again. I was biased to downside, last week after Monday, and now I'm right back in that camp again. But we will, hopefully it's clear now how I kind of monitor what happens to see if that bias holds or if it, needs to change.